The average UK homeowner saw their property value increase by £600 in April alone, according to Nationwide. This modest gain follows a year that experienced property value declines of several £1,000s. A closer look reveals a looming financial deadline for many, set to converge around 2026. The Bank of England's base rate has remained at 5.25% since August of last year. This figure, often discussed in economic reports, directly impacts a significant number of homeowners. During 2021 and 2022, when the base rate stood at just 0.1%, a substantial portion of the population secured 2-year and 5-year fixed-rate mortgages. These agreements, once offering stability, are now nearing their expiration dates. 2-year fixes are lapsing this year, with 5-year deals rapidly approaching their end in the coming 2 years. For individuals who purchased homes in 2021 with favourable fixed rates, their budgets will soon face renegotiation. The new rates will reflect the Bank of England's current efforts to manage inflation, which was 2.3% in April, above the 2% target. Kim Kinnard, a director at Halifax Mortgages, noted in April that borrowing costs remain elevated compared to a year ago, which is impacting the amount people can afford to borrow. This indicates that many homeowners will face notably increased monthly mortgage payments. This situation extends beyond individual circumstances. It represents a fundamental shift in household economics across the UK. In March of this year, mortgage approvals for house purchases reached approximately 61,100. While an improvement over the 2023 average, this figure remains below the 67,000 approvals recorded in February 2020, before the pandemic. This reduction in mortgage activity reflects current market conditions. The average UK house price, as reported by Nationwide, is £261,962. Halifax provides a slightly higher average of £288,949. The median house price currently stands at 7.6 times the median annual earnings in England and Wales. Robert Gardner, Nationwide's chief economist, observed that while a moderation in price growth might appear beneficial for some first-time buyers, affordability challenges remain. For those unable to purchase, the rental market presents its own pressures. Private rental prices in the UK increased by 9.2% in the 12 months leading up to April 2024. This growth, driven by high demand and limited supply, further complicates saving for a down payment. Official projections from various financial institutions frequently anticipate a soft landing for the housing market, citing factors like strong employment and limited forced sales. However, other analyses suggest a more significant downturn. The financial volatility following the September 2022 mini-budget led to a sharp increase in mortgage rates, impacting market confidence. As 2024 progresses into 2026, the expiration of numerous fixed-rate mortgages from the low-interest period presents a critical point. Should the Bank of England maintain higher interest rates to control inflation, or if broader economic conditions deteriorate, an increase in forced property sales could occur. An augmented supply of properties, combined with reduced buyer affordability, could contribute to significant price adjustments. Jeremy Leaf, a North London estate agent and former RICS chairman, pointed out that prices have decreased by 4.5% from their August 2022 peak. They remain up by £60,000, or 26% compared to 2019 levels. The refixing period for these mortgages is drawing nearer. Homeowners who secured low rates years ago now face a changed economic landscape due to inflation and the Bank of England's monetary policy. The extent of this impact remains a central concern for the stability of the UK housing market.